We're seeing a domino effect. What started as a health outbreak quickly became a global pandemic. We're experiencing historic market slides. S&P 500 saw one of its steepest declines in history between mid-February and March. But luckily, diverse solutions and concepts are emerging in response to this crisis, and one of them is social bonds. Today, we're going to discuss social bonds and if they have the potential to perhaps save the economy. I'm here with Chris Wigley, fixed income specialist and portfolio manager. Chris, welcome.
Hi, thank you very much indeed for inviting me.
Great. So, Chris, what are social bonds and how are they positioned to provide some help to our economy right now?
So, you may be familiar with green bonds, and social bonds are the sister product to green bonds. They're very similar. Now, there is a global organization called the Green and Social Bond Principles who coordinate the growth of the green and social bond market. And essentially, in defining a social bond, there are four pillars, but two are the most important. They are mandatory. So first of all, a social bond has to disclose the use of proceeds. So when you normally look at a conventional bond, at the prospectus, there's normally a page on use of proceeds, and it will just say for general corporate purposes. So investors don't know how the money is going to be used. However, with a social bond, the social bond discloses how the money will be used. It could be for affordable housing, it could be for access to education, or it could be access to health as well. Now, the other key pillar for social bonds is that unlike conventional bonds, the issuer undertakes to report on a regular basis. It's normally annually, and increasingly it includes impact reporting. So this really strikes a chord with investors today, whether they be millennials or Generation Z or institutional investors. Increasingly, investors want to know how their money is being used. They don't want it to necessarily go for things like armaments or to tobacco and other issues like that, but they do want it to go to, for example, green purposes to fight climate change, or for social purposes as well. So there is a key opportunity now with this pandemic that's affecting all of us at the moment.
Okay, so that's a clear understanding of what they are, and thanks for putting that in context of green bonds. Now, give us a bit more detail on how they can help us at this point. What should investors, institutional investors, look to do, use these social bonds to really help them with their investing in the middle of this crisis?
So we have a unique position now. So something like 12 years after the financial crisis, economies have been recovering, but we're now faced with this pandemic. But unfortunately, following the financial crisis, a lot of central banks are not in the strong position that they were 12 years ago. Interest rates are very much lower than they were, very close to zero in many economies. So it could be argued that the central banks are starting to run out of ammunition, which means that the markets and individuals have been turning to governments instead. But as we know from the financial crisis, again, 3 years after the financial crisis, we had the sovereign debt crisis that really affected countries like Portugal, Italy, Ireland, Greece, Spain, for example. So countries have been very mindful of their debt to GDP ratios. So which really leaves everyone with a dilemma as to where do we turn next. And in actual fact, the global bond markets are in the region of about $100 trillion in size. So the recent program from President Trump amounted to $2 trillion, which is a very sizable amount. But of course, it's much smaller than the $100 trillion that's available in global bond markets. And similarly, there's about $70 trillion available in equity markets too. Now, the social bond product is a way of actually channeling those funds into projects that can really help us right now. So as I say, the social bond product discloses the use of proceeds. And that use of proceeds could be, for example, to fund vaccine programs, or it can help with economic recovery as well.
So, and could we discuss specifics? I mean, what countries and what supranationals are really working on this right now? Who's doing it well and what are they doing?
So the social bond market is around about 14 years old now. The first social bond was issued in 2006, significantly by a supranational called IFIM, or the International Financing Facility for Immunization. So this was a supranational backed by countries like Britain and France and Sweden and the Netherlands, for example, to actually fund a vaccine program, in this case, helping children in Africa. But the key thing is here that IFIM have the history and the expertise of issuing social bonds into the market to fund this program. And of course, we're faced with a very severe pandemic now. So that's one element of the social bond market. As I say, it's about 14 years old, and there are other issuers who have come to the market as well. Another example is the Inter-American Development Bank, of course, AAA rated. They've had a product for a number of years. Specifically, they call it an I bond, or EYE, and the EYE there stands for Employment, Youth and Education. So you can see the sorts of projects there that the funds can be used for. And it's not just these issuers, there are other issuers as well. For example, IFC, who are part of the World Bank, also the European Bank for Reconstruction and Development, and other supranationals too.
Great. Please.
Sorry, I was just going to say that in total, the size of the market is in the region of about $50 billion or so and growing.
Okay, great. I'm really curious to talk a bit about the so-called COVID-19 bonds. I know that the African Development Bank is participating in the Fight COVID-19 bond. I really would like to get your thoughts on what that consists of, and if we see those types of bonds specific to this specific outbreak really emerging.
Yes, this is really interesting because we have, as we said earlier, a unique challenge, and the supranational banks are rising to this challenge. So just in recent days, we've had news that banks are actually looking to launch. And there is one, as you mentioned, the African Development Bank, that was came to the market yesterday. So this was $3 billion in size. It was a 3-year bond with a 0.75% coupon. And here, the money was specifically going to be used to create conditions for economic recovery following the COVID-19 virus. It's to support and to finance countries with their business fight, really, against COVID-19. And similarly, it's not just the African Development Bank. We've also had news that the Inter-American Development Bank, too, is going to launch a COVID-19 bond. Again, here, it's probably going to be a 5-year issue. And again, they're saying that this is going to help countries in Latin America and the Caribbean cope with the challenges posed by the pandemic. So supranationals are rising to the occasion and could be an important source of funds going forward.
And in terms of what the funds are designed to do, and taking this one specifically, fighting the most urgent needs in terms of medical equipment, drinking water, things of that nature, how can people see the real effects, as well as institutional investors and individuals see the real effects of what can happen as a result of having these types of social bonds in the market? What is the end result?
So we can perhaps look at the challenge facing us in 4 stages. So one is actually treating people who are sick and trying to reduce the risk of infection. The second stage is business continuity. A third stage is to deliver a vaccine, and then a fourth stage is to deliver economic recovery. Now, the first stage, the most challenging we're hearing around the world, is the provision of testing kits, of masks, of ventilators, and of oxygen. And there's no reason in theory why social bonds shouldn't be able to fund those programs in some way. For example, helping factories repurpose themselves for this production. And this might actually call for some social bonds to be issued by corporates. Another stage is business continuity. So here, supranational banks may be able to assist economies in continuing their economies while we go through this peak of infections. A third stage is delivering a vaccine at scale. And I mentioned earlier the International Financing Facility for Immunization. Now, as I say, they have experience in issuing social bonds or vaccine bonds to fund the program. What we're going to be faced with when a vaccine is eventually available is it needs to be in sufficient size, and then it needs to be delivered to the population at speed. And conceivably, it's possible that IFIM may be able to scale up their role in this respect. And then fourthly, we talked about economic recovery. This is very important. We're hearing that purchasing managers' indexes are plummeting. We've heard recently that Singapore's GDP had fallen more than 10%. The forecasts are for a significant decline in GDP amongst global economies. Some economists are talking about a deep recession or even a depression. So economic recovery is going to be crucial. And here I think not only social bonds, but green bonds can play a key role in that economic recovery. So, for example, green bonds can help in terms of green infrastructure. There is a need for more green transportation to be built. There's a need for more renewable energy in terms of solar parks and wind farms, for example. And this is all called green growth. But it's also social bonds can assist with social infrastructure as well, because it's also going to be needed, particularly in developing countries, to have the installation of sewers, greater access to drinking water, better sanitation, for example. So these are projects that social bonds can fund too. So in the economic recovery stage, there's a key role that can be played by both social bonds and green bonds.
So, Chris, we've talked about the transparency that social bonds provide. We also talked about what we've learned from the financial crisis that took place over a decade ago, and also what social bonds are delivering. We've talked about that and how they can support economic recovery with these very timely examples. What are the top 3 focus points that an institutional investor should think about when considering if social bonds are the right tool for them, for their portfolio?
Well, as you say, some key elements are the transparency of social bonds and also the impact of social bonds as well. And these are the 2 additional things that social bonds provide compared to a conventional bond. Social bonds should yield the same as a conventional bond from the same issuer because the credit risk is the same. But the investor gets something additional. That's the transparency and the impact. So it's a win for investors. We also have to bear in mind it's a win for issuers as well, because by issuing social bonds, they're also increasing their investor base. But it's also a win in the fight against this pandemic. So we could say it's a win-win-win situation. But in addition to all this, what I would note is that going into this crisis, credit spreads were relatively tight in the region of about 100 basis points for the US dollar corporates. And since then, they've widened out significantly to about 400 basis points. And that's the widest they've been since the financial crisis. So it's possible to say that, relatively speaking, credit or corporate bonds, and in this case social bonds, offer more value than previously. But a second point is that during this crisis, economists are forecasting, unfortunately, that there will be earnings downgrades, there will be credit downgrades, and unfortunately there will be some credit defaults as well. So the risk out there is forecast to increase. Now, uniquely for the social bond market, it's very much dominated by supranational banks that are AAA rated and AA rated. And so the credit risk is lower there. So we can say that social bonds issued by supranationals may be said to be relatively attractive in terms of credit protection. And the third point we can highlight here is that with the forecast scenario of a deep recession or depression, there may well be more volatility in risk assets. And that means that asset classes such as bonds, including social bonds, may play a key role in investors' portfolios in terms of lower volatility or a safe haven in financial markets in this time of uncertainty.
All very good points. Lower credit risk, potential lower volatility. Chris, thank you so much for your insight on social bonds, and thank you for joining us today.
Thank you very much indeed for the invitation.
We invite you to subscribe to the Refinitiv Sustainability Perspectives podcast on iTunes, Spotify, or wherever you stream your content. What did you think about the podcast? Leave us a review on iTunes or follow us on LinkedIn and Twitter for updates on our show. Thank you for joining. See you next time.